Sawubona. So we continue with our discussion. We still have Cliff here. He's a property expert. We introduced him in our last. He's a property investment expert. In our last episode, we spoke about the various options that are available within the market, within the Zimbabwean context, where one can invest in the property market. As we have seen, personally, if you drive around Harare, especially in the northern and western suburbs, you see a lot of development. There's a lot of development that is going on. A lot of people are building cluster houses, and I think we can actually safely say that there's actually a boom that is going on. And if you go to the western suburbs, there you also see that a lot of people are developing their own personal houses in Centon. But the focus for us today is when we look at these options, what is really happening? You mentioned something you called real estate trust. I've seen a few malls being built around. What is it? What is the real estate trust? Is it trust?
Yes.
What are they?
Okay. REITs, which are generally known as real estate investments trust. These are investment vehicles where people put their funds together to buy investment properties, which can be either commercial buildings, malls, offices, to get return in the form of rentals, but they are paid in the form of dividends.
Okay.
So these ones in Zimbabwe, they are the first of its kind. I think maybe it's your first or second time to hear about it, but they were registered in 2021 and then operationalized in 2022 by Tigere, which is the first pioneer to initiate and also to action the initiatives. Tigere Trust, they've done two projects right now, which is the Highlands Park. As you noticed, it was officially opened by the President of Zimbabwe last year. So
Yes.
that's the first project. And then there is Chinamano as well, Chinamano Mall along 2nd Street. It's one of the projects as well, which forms part of the properties they own.
Okay.
Yes, and it was registered on the stock exchange, where people right now they've already started to earn dividends from those. And also, if you're interested, you can also go and buy your units, because we refer to them as units, because those who put their funds together, a person is allocated units depending with the amount that he had invested. You can start with as little as $1,000 to invest in those. So it does not limit in terms of initial capital outlay. It's very small as compared to when you want to invest in a commercial building.
Okay.
Alone. Yes.
So what is the general rate of return? Just an indication. Is there a standard, or like you said, it's a dividend? So how does this operate? When I invest my 1,000, am I guaranteed a dividend, or they are going to declare it? How does this operate? How do they operate?
Okay. Since you are familiar with the way stocks, shares are being sold on the market, that is the same formula they used.
Okay.
So anytime when the management declares the dividends,
Okay.
that's the time they will pay.
Oh.
Yes.
So that they have to declare dividend
Yes.
at the end of a period that they determine. It may be a year, or maybe after 2 years. It all depends with how their properties are performing.
Yes.
Okay. So what do I get in return? I put my 1,000 in. What do I get in return? What do they give me?
Okay. What they give you a certificate, which shows the number of units that you own in the trust. So that act as a form of ownership, which is more similar to a title deed. The opportunity that it presents to you is different from when you buy a property. The process is less rigorous, and there are less cost when you're investing in REITs.
I have to admit that this is the first time that I've heard about this, and I personally don't know much about them, and I think from a layman perspective, I think this is quite a good opportunity. My only worry would be the dividend. And so when they started last year,
Yes.
2021.
True.
They started last year, but one.
They started 2022, which is last
2022
year.
last year.
But
So
in
they
terms
have not yet declared a dividend.
I'm not so sure if they declared a dividend yet.
Okay.
Yes.
Okay. I think it's a good opportunity. So guys, there you are. This is an opportunity for those who want to. I think you can go. Where can they find these people? At the stock exchange, where can they find them?
Okay, at the stock exchange, they are listed. You can go, you can inquire there, and also they have offices, I think, in Borodale.
Okay.
Yes, you can
So-
go and get more information. But it's you highlighted that there are certain question marks that you might have with that form of investments. Any investment that you want to consider, there are pros and cons
Okay.
that comes with it as well.
What are the disadvantages that you may think of, especially given around this topic?
Okay, the disadvantage mainly is that they are still new in the market, so it's still a pilot project. So there are certain risks that comes where maybe people might say that they might be, the manager might be fraudulent,
Okay.
where they might under declare and benefit. So you need someone who is reputable. So those are the disadvantages that comes with it. Not necessarily saying that they are not reputable, but when you are looking at generally,
Okay.
yes,
fine.
there are
That's
those disadvantages that comes with it. Maybe also in terms where you'll be looking at that portfolio mix, if it's properly covering those with high returns. So the trust as well needs to invest in good properties with high returns, not to limit to certain property that might be distressed. So it now depends with the trustee management, their taste and selection of properties, if they are providing the best return in the market.
Okay. Well, that's fine. I think they've got a lot of work to do to popularize or to make the market know about their project. So when you look at this real estate investment trust, are they similar to unit trusts that are also offered by other entities in the market? For example, Old Bushco? Is it the same?
The model is the same, but on this one we are investing in real estate.
Okay.
So there's real estate equity.
Okay.
So you know that you are investing in something that is tangible. You can pinpoint a property that my man is on this property. This is our project.
Okay.
So you have something that is tangible.
Okay, that's fine. I think it's quite clear for me. So I think I do understand. You also, in our previous episode, you also mentioned what you said was house flipping. Can you elaborate more about that?
Okay. House flipping is an investment form where you buy a property for reselling.
Mm-hmm.
Yes, so on that form of investment, it means that you are targeting distressed property.
Okay.
There's what we call a 70% rule, where you be targeting property that is 70% less the market value.
Okay.
Yes, so for you now to consider that option, we expect you to be familiar with the market, to be knowledgeable about property valuation, and also to be knowledgeable about renovation. So that means we are buying a property that you know that it's underpriced. Because if you fail in identifying or choosing a property at the right price, the model might not work. And also if you underestimate the renovation cost, and then when you try to sell it, it might take longer to dispose the property. And also when you underestimate the property market and assume that you can easily sell a property, and then you might face challenges when you want to dispose the property because of the underestimation, because you might think that you have bought a property at the lesser price when it's overpriced. So the house flipping part will not work. You will not benefit from what we call the capital gain, which is the profit margin, and of which a house flipping model is supposed to be done within 6 months period. That means you buy a property, you renovate within 6 months, it must be sold. Okay. Yes.
So in short, you're saying I buy a property for a property in an environment where, or in a location where properties normally cost 100,000, and when I go there and buy it at 70,000.
70 is the maximum
The
that
maximum
you can
that
pay.
I must pay.
Yes.
Then whatever renovations that I must be doing, they must be falling within the 30,000 or the 30%.
Slightly less.
Okay.
Yes, because when we say
Because
the
there's
70,
I must also be getting
Yeah.
a profit out of it.
yes. So when we say the 70% rule, that means your renovation cost must fall within the 70%. So that means 70% less. It means 70% is the maximum value. If you add your renovation cost, your initial capital outlay acquisition, it must add up to 70%.
Oh, okay.
So 70%, maybe if you pay a little bit more, maybe your cost increased up to 85%,
Okay.
then your profit margin might have reduced. So on this one, the target is to get 30%
Okay. As a profit.
as a profit.
Okay. That's okay. I think that's quite understandable. And you also mentioned about buying properties for rentals, and I wanted to understand more about rentals. Why? Because I've seen a lot of people struggle with tenants. 1, 2. I've also seen a lot of people complain because these tenants, they run down their properties. I had a friend a few years ago, and we went to his property, and there was one person who was on the lease. He didn't know that this property was being occupied by foreigners. And when we went there were over 30 people who were living in that property. And the people were actually doing drugs in that property, and it was a rundown. They were growing drugs in the property. So it was actually rundown. So how good is buying property for rentals?
Thank you for that question. Buying good for properties for rental, it's a good form of investment because you are guaranteed revenue monthly. That means there's a steady flow of income, as well as if you buy in the right location as well, there's capital appreciation where the property might add value. But with the factors that you highlighted, the property might also be affected if there are bad tenants within the property. So what I can advise is that do it yourself, DIY. It's a preferred option of managing, but it has its disadvantages if you are not knowledgeable about the real estate market and who to appoint, both the real estate expertise that are available, whom we refer to as property managers or estate agents, that you can appoint who can manage the property on your behalf. So when it comes to the issue of tenants who are doing illegal businesses, what we do as estate agents is that we do periodic inspections where we inspect the property after every 2 or 3 months to check if it is still in the right state of repair. That means we will monitor the rate of damage, if any, and then also use the deposit to renovate the damages, and it will also minimize the chance where you can see a property that is run down because you're continuously visiting the property. So those are the strategies that we put in place. And also what we do, we would also do the tenant selection, where we will check the background of the tenants, their type of business, where they are employed, who will stay in those buildings. And also in the lease agreement, we also mention that there's no room for subleasing.
Okay.
Because the more the tenants they're in the house, the more the rundown risk will be available.
I think my final question comes to you in 2 parts. I just want to understand more about, you mentioned location, and I want to understand more about this. So when you say location, we've got 4 different types or 3 different types of locations to me. We have high, we've got middle, and we've got low. And you mentioned that there are properties that increase in value or that appreciate in value. So between these 3, which one is likely, or what are the factors that cause a property to appreciate in value?
Okay. Yeah, the factors mainly that cause properties to appreciate in value is, one is demand and supply.
Okay.
If there is more demand, generally property values will increase.
Okay.
And also the other factor is if the project is located in a path of growth. For instance, taking for example the Westgate site, where the new city concept
The cyber city.
yes,
Yeah.
the cyber city is being pushed. Property values there, they are going up.
So the new corridor.
Yes, the new corridor. Yes.
Yeah, okay.
Because of that opportunity, property values are going up.
Okay.
So those are the factors which causes property values to go up.
Okay.
Besides the improvement that can be done by the property owner.
Okay. So in your view, let's say I've got some money. Where do I invest? High, low, medium?
Okay. Yeah. It's like advice.
Just
to your friend.
just
Oh.
advice. You're giving advice to me. Let's say I have money. And
No.
I want to invest in property. Between the three options, where should I put it?
Okay. Between the three options, I would recommend high density.
Why?
Yes, because the payback period is shorter, and also the rate of return is higher, which reduces the payback period. For instance, if you buy a high density worth about 35 or 30,000, you can get an average rentals of about $300 per unit per month. Yes, and then for a medium density, the house generally the price is about. It ranges from about 60 to 70,000. You can get a rental of about 400 to 450.
Okay.
At most 500.
Okay.
And then for low density, it starts from 700, is highs to 2,000. So when you look at it now, the return, if you are buying for investment, the return is higher on high density properties.
Okay.
However, in low densities, there are new opportunities that are coming up, like the concept of clusters, where there is densification.
Okay.
The cost of construction per unit generally ranges from about 70 to 8 to 100,000, but people are charging as high as 700 or to 1,200 rentals. So in terms of return on investment on a cluster unit, it's higher because there will be more units on a same piece of land where you can have one property and there will be a tenant paying 1,200, but you can have maybe 800 with 8 units on the same property.
Oh, okay.
So that is the opportunity. That's why most of banks, individuals, they are now doing cluster project as a form of investment.
Okay. Thank you very much. This is quite insightful. Thanks a lot.
You're welcome.
So guys, there we are. Let's continue the discussion. If you've got any more questions for him, just bring them through the comment section and we will bring him back. If you want more from him, we will definitely bring him back. Thanks. Have a good